Good morning, dear students. Today we shall begin with the second part of the third chapter, that is money and credit. In the previous part, we had studied about the evolution of money. Initially, goods were exchanged for goods, and this system was known as barter system. After that, various coins came into effect made of precious metal that were used as medium of exchange. Later on, alloy coins and paper notes were made, and nowadays plastic money is very widely used. So the topic for today is loan activities of bank. Money market can be divided into organized and unorganized sector. Organized sector is also known as formal credit sector. Unorganized sector is also known as informal credit sector. So the term credit refers to loan. So the money market in our country is divided into two parts, that is organized sector and unorganized sector. You already know organized sector is the one where rules and regulations are fixed, and unorganized sector is the one where there is no rules at all. So organized sector is also known as formal credit sector, and unorganized sector is also known as informal credit sector. So the formal credit sector provides loan at a low rate of interest. This sector is supervised and controlled by Reserve Bank of India. The commercial banks are the main constituents of formal credit in India. So commercial banks hold the major part of formal credit sector, and it provides loan to the people. It provides credit rather to the people at a very low rate of interest. And this formal sector is supervised and controlled by the apex bank, that is Reserve Bank of India. From time to time, RBI updates its guidelines, its rules, and all these commercial banks, they need to adhere to it. So these banks have to deposit a certain percentage of their total deposit with RBI, cash reserve ratio at 3%. So the banks, these commercial banks, they have to deposit a certain percentage of the total deposit that customers have deposited to their bank with the RBI, and this deposit is mandatory for each and every commercial bank, and it is known as cash reserve ratio. This particular percentage that is kept with RBI has to be in cash only, and that is why it is known as cash reserve ratio or CRR, and the present CRR rate is 3%. These banks are also required to keep a certain percentage of total deposits to themselves so that they are able to pay the depositors who come to withdraw money on any given day. Statutory liquidity ratio at 18%. So these banks not only need to make certain deposit with the RBI, they also need to keep certain percentage of the total deposit that has been made by the customers to themselves, so that at any given day, if the customers come to take out the money, to withdraw the money, they should have enough amount of it. And this particular percentage that they need to keep to themselves is known as statutory liquidity ratio, SLR, and the current SLR of India is 18.5%. The formal credit sector mainly meet the credit needs of rich household. As a result, RBI has directed the formal credit sector to give certain percentage of their lending to the farmers and other small borrowers. This has been done to reduce the dependence of farmers and small scale industries on informal credit sector. So the formal credit sector mainly provides loan to the rich household, and as a result, RBI has suggested the formal credit sector to give the loans to the farmers or the owners of small scale manufacturing units or the small artisans, so that these individuals who are currently dependent on the informal credit sector, they are able to get benefit from the formal credit sector. Now let us understand in detail what is formal credit sector and what is informal credit sector. So formal credit sector mainly includes commercial banks and cooperative societies. Commercial banks are the most important constituents of banking system. These banks accept deposits from the public. Bank keep a certain percentage of these deposits with them. The balance is used by the banks to lend loans. Banks pay interest to the deposit holders and charge interest from the person who take loan from the banks. Banks pay interest at a lower rate on deposit and charge interest at a higher rate on loans. The difference of interest is the main source of income for banks. Thus, commercial banks perform two main functions, that is accepting deposits and advancing loans. So the main purpose of commercial bank is two. First, to accept deposit, and second, to advance loans. So whenever they accept deposit from the public, they give certain percentage of interest to these people, to the account holders, and they lend the amount that is present with them to the different individuals who need loan, and the rate of interest on that loan is comparatively higher. So the difference between what interest they are paying and the interest they are getting, that is their main source of income. Cooperative societies. Cooperative society is another form of formal credit in India. Several types of cooperative societies are found in India, like farmers cooperative, industrial worker cooperatives, etc. These cooperatives accept deposits from their members and also take loan from cooperative banks. These funds are used to provide concessional loans to the members. The loans are provided to their members for productive purposes like purchasing equipments, cattle, etc. So cooperative society is another form of formal credit sector, and in this society there are various members who can access loan from this cooperative. Now these cooperatives are made for different purpose. One cooperative may be for farmers, the other may be for dairy products. So these members, they deposit certain amount of money, and many a times they even get money from the cooperative banks, and then the members can avail the facility of loan at a very subsidized rate. The rate of interest is very low, and the purpose for which these loans are given is productive. The people need to use it in a very productive manner. Suppose if someone needs to purchase equipments for agricultural purpose, they can avail loan from cooperative societies. They can purchase that item once the agricultural output is sold in the market and they get profit. They can return the amount to the cooperative. Next is informal credit sector in India. Informal credit in India includes credit given by unorganized sectors like indigenous bankers, money lenders, chit funds, etc. So all those loans that are given by different individuals who are known to be either money lenders or the landlords, in which in whose land someone is working, or there are certain bankers who do not mainly own a particular bank. They are just fake bankers who provide loan and charge higher amount of interest. So there is no organization which supervises and controls the lending activities of informal sector. So the formal sector institutes are supervised and controlled by Reserve Bank of India, but there is no organization that supervises the work of informal credit sector. Unorganized sector plays a significant role in rural economy and is the main source of finance to village artisans, small farmers and laborers. So all those people who are in need of loan in the rural area, they are mainly dependent on this informal credit sector. Although they charge a higher rate of interest than the commercial banks. And the people who lend money in informal credit sector, they usually have personal contact with the borrower. They personally know the person who borrows money with them. Now the next topic is two different credit situations. So there are two completely different situations in which loan is taken. The first one is festival season. It is festival season 2 months from now, and the shoe manufacturer Salim has received an order from a large trader in town for 3,000 pairs of shoes to be delivered in a month's time. To complete production on time, Salim has to hire a few more workers for stitching and pasting work. He has to purchase the raw materials. To meet these expenses, Salim obtains loan from two sources. First, he asks the leather supplier to supply leather now and promises to pay him later. Second, he obtains loan in cash from the large trader as advance payment for 1,000 pair of shoes with a promise to deliver the whole order by the end of the month. At the end of the month, Salim was able to deliver the order and make a good profit and repay the money that he had borrowed. So Salim is the manufacturer of shoes who has got a big order, and in order to arrange for capital that is required in his business, he talks to two people. First one is his supplier, the one who supplies leather. He asks him to supply the goods now and he will make the payment later on. So it is a form of loan that Salim will be paying off later on. And another is the one who has placed this order. Salim asks him to pay for 1,000 pair of shoes, that is 1/3 of his order. So he asks for 1/3 payment presently. so that he is able to meet all the expenses of keeping extra workers and everything. And he promises that he will deliver the entire order of 3000 pairs by the end of the month. And fortunately, Salim was able to complete his order by the end of the month. So he gets his money for remaining 2000 pair of shoes. He makes the payment to the leather supplier and other workers, and he gets a certain amount of profit out of it. The next one is Swapna's problem. Swapna, a small farmer, grows groundnut on her 3 acres of land. She takes a loan from the money lender to meet the expenses of cultivation, hoping that her harvest would help repay the loan. Midway through the season, the crop is hit by the pests and the crop fails. Though Swapna sprays her crop with expensive pesticides, it makes little difference. She is unable to repay the money lender, and the debt grows over the year into a large amount. Next year, Swapna takes a fresh loan for cultivation. It is a normal crop this year, but the earnings are not enough to cover the old loan. She is caught in debt. She has to sell a part of land to pay off the debt. So this is another situation in which loan has been taken. Swapna is a small farmer. She owns 3 acres of land, and she needs to meet all the expenses of input for cultivation. So she takes a loan from the money lender. But unfortunately, her crops are affected by pests, and as a result, she is not able to get a good amount of profit. The crop fails entirely. So again, next year she takes the loan because the previous year's crop was ruined, and as a result she could not get profit. So she is not having any input to put in the cultivation. So she takes it another loan from the money lender, and again she cultivates the land. But this time, whatever profit she has got, she need to use it to repay previous year's loan. And in order to pay the complete amount of loan, she has to sell off her land because she has not got any other option. So these two situations are completely different from each other. In case of Salim, credit played a vital and positive role, and in case of Swapna, the failure of crop made the loan repayment impossible, and she was caught in debt trap. Okay, debt trap is a situation in which an individual is not able to pay the previous debt, and in order to carry out their work they need to get a fresh amount of loan, and ultimately people are caught up in it because they are not able to pay it off. Hence, whether credit would be useful or not, therefore, depends on the risks in the situation and whether there is some support in case of loss. So, whether a loan amount is going to be useful or not depends on the amount of risk that an individual has. Salim was not having a high amount of risk. All the situations, all the circumstances were in his control. But in case of Swapna, the situations were not in her control. The crop failure happened due to pesticides. Although she was using expensive pesticides, the pests affected the crop. So today we have studied about the functions, or rather the loan activities of bank. People make deposits, and people can withdraw their deposit and get their interest as well. The banks, on the other hand, they advance loan to the borrowers, and in exchange they charge a higher amount of interest. After that, we studied that money market has got two parts. One is formal credit sector and the other one is informal credit sector. Formal credit sector has two main components, that is commercial bank and cooperative banks. Informal credit sector has got money lenders, landlords, chit funds and private finance companies. You already know about local money lenders and landlords of the land in which the landless laborers work. They are the two main sources of loan for the people living in rural area. Along with that, chit fund is a company that is sometimes registered under the Companies Act, and the members of those chit funds make periodical subscriptions to the fund. And the last one, private finance companies, are the companies that take deposits from the people, but these are not demand deposits. The depositors cannot withdraw money whenever they want to. Rather, that money can be withdrawn only after a pre-specified period of time. So these are the various sources. And that is it for today. These are your assignment questions. The first one is, what are the differences between formal and informal sources of credit? You need to write at least 5 points. The second question is, why should credit at reasonable rates be available for all? And the third question is, what are the reasons that make Swapna's situation so risky? So that is it for today. Thank you.